The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento, and Larry's away, so I'm sitting in here. Normally I'm in the Monday through Friday, 11 o'clock till 12 slot, and that's called the Tiger Technicians Hour. My service actually here at TFNN is a newsletter that comes out every single day, just a really detailed report describing exactly what we're looking at, why we're looking at it, where the market is, short-term, near-term, intermediate-term, long-term, different time frames, 120-minute chart, daily, weekly, monthly. Just a lot of work. I discuss the TLT, the parameters that we're looking for, talk about the GLD parameters we look at, might be having trades, might not have trades, still discuss them, the Dow Diamonds, the SPY, the Qs. Just a detailed report. And in fact, we have 3 long positions and 3 short positions. That's this bifurcated market. The 3 short positions are doing nicely on the downside. They're down, which is what you want when you're short. And in the 3 long positions, 2 of them are doing nicely. One is right at the price, just within 10 cents or so of where we bought it. And I added a stock today, in fact, and it was really important to add because if, in fact, this particular stock does what I think it could do, it's going to be a big tell on the market. Besides which, the big tell on the market right now, let me just show you this. This is the E-mini. This is the work that I do. I use a technique that I've developed over many decades called the Chapman wave. It's the umbrella name for a very simple technique that identifies the most obvious low bar. Let's just go to the E-mini. The E-mini at 16.50. That was at 8:30 in the evening on the 14th, gave a signal that said it's going to reverse with the MACD and the slow stochastic. And where does it run up to? It went right to the left side, right side price time match from the 1454s level back in October the 9th. This is the 120-minute chart. To breaking out this morning, 1 bar early to that exact time match. And it broke out, and right now it's trading at 1456.25, up 725. That's not represented by the Dow because the Dow's down 411. Why is the Dow down 411? IBM, which is a very big part of the Dow on a percentage basis, got slammed. IBM right now is down, I'll tell you, IBM is trading at 200.56, down 10.44. Now, I use a whole bunch of techniques. I've spoken about them in my show just a little earlier, but if those of you who are just tuning in expecting to hear Larry, Larry's show, he does fabulous work. His show is called Trade What You See. And then tomorrow is called the Futures Hour. Well, what I'm seeing and what I think is worth looking at in terms of trading is to look at in this case, IBM, and you'll see that there was a double top in the weekly chart, this middle chart. The previous high was 210.69. It just squeaked a little high. It went to 211.79 yesterday. Earnings came out. Now, I discussed a whole bunch of things. In my technique, what you look for is the most obvious lowest low bar, and you start your wave count. And in IBM, the last low bar of significance was on the 30th of August at 193.18. And the objective in the Chapman wave is to be able to identify so that you're looking at the price move to at least 4 higher peaks. And what does the 4 higher peaks say? It says that if the technicals are improving, if the chart pattern is good, if it's holding above certain things like the 9-period moving average. Now, of course, Larry doesn't use moving averages. He uses a different technique altogether. He uses a technique that's looking at Gartleys and butterflies. But it's fascinating because you can apply that here as well. Most importantly, what I'm looking at is in the IBM chart, it made that double top in the weekly, and there is a chance that if you're looking at this, and if you want, you can draw some kind of a butterfly. And I just don't think it's going to be there. I think IBM might be making some kind of a top here. But you could look at this and say, whoa, wait a minute. There could be, in fact, a decline to the downside of IBM all the way down to the 180 level based using the triangle method. Now, I'm going to use the triangle method. In fact, I'm going to do this. I don't think it's going there, but this is just a pattern that you would use. And look, that looks very much like the Gartley pattern, at least. So you can apply these techniques. I prefer to stick with the ones that I use, which are arches, cup formations, V-shaped formations, inverted V formations, and most importantly, I like to look at the count. And the count went to a peak D, the fourth highest peak. That's what you expect. And a 211.79 pull back. Bounce, tried to get to a new high yesterday, went to 211, a round number. I look at round numbers at the tops, at the bottoms. They're very important in my work. And then what happens? It plunges down to today because the earnings came out a little disappointing, I guess. And it's down at 200. It's only down 5%. It's just not a big deal. It's a $200 stock. I believe it's going to test 195, which is the 200-period exponential moving average. That, to me, would be important. Now, let me just show you something. I do want to draw this in because, to me, it matches my work exactly. And I'm going to show you something. There is a potential for a Gartley going down to where? Down to the 195 level. All right? I can't color it in, but there's your Gartley. There's your rising, expanding wedge. There's your declining wedge. That's where I would expect IBM to pull back to. Good. Enough of that. Now, I want to go through a couple of the charts. I'd spoken about natural gas. We had a caller from Erie a couple of weeks ago, and I said that the way I'm looking at natural gas is that natural gas is in the Chapman wave from the most obvious lowest identifiable low bar. That was the low bar of the 29th of August at $3.055. That it had made a peak A, B. There was a left side, right side price match. I'm going to add these things. I'm going to put an LS, if you're looking at the charts, right here at Tiger TV, left side, right side. You will see that from the high of the peak F high, sixth highest peak, on the 31st of July at 3.61, there's a cup formation that goes all the way down to the low of 3.055. I'm going to be teaching a level 2. This is for a more advanced course of the Chapman wave. There's a Thursday a week. That's for those who have done my level 2 two-day either webinar or live two-day seminar. More importantly is for those who have never done this but are just beginning to get into the Chapman wave, you've seen how many, I'm not going to say dozens, I'm not going to say hundreds. I've been here over 8 years. I believe it must be in the thousands of buy signals that have gone to a peak D or an E or an F, but at least to a D. So I'm going to be giving a two-day webinar on December the 6th and 7th, Thursday and Friday, all day. And we're going to go through this. You're going to get a bonus. You're going to get my CD introducing the Chapman wave methodology. I talk about these techniques. It's only available at TFNN. I'm going to the other bonuses. I really want it to be a fabulous introduction from the very beginning to the more advanced stages of what happens when you get to a D. Can you get that instant restart? How do you go to an F? What do you look for? And in fact, thank you to my wonderful engineer. He just posted right there on the front page. It says, Master Trader just announced level 1 December 6th and 7th and level 2 for the more advanced. Those who have already done my work, that's level 2 will be October 25th. Just one day right here at Babson Executive Conference Center in Wellesley, Mass. And I'm really looking forward to all of them. I just love these. I can out the office, I can teach, I can see eye to eye, or in the case of the webinar, I can ask the questions, people respond. I go, right, you ask a question, I will answer it within a split second, and I will show you. At this point, I have built up literally dozens of examples for every single one of the techniques. Inside wedge, what was that? I've got a special chapter, gray letters, dreaded H, flat base restart, everything. You ask me, I've got it there. So with that said, look what happened. Natural gas goes to where? breaks above the left side, right side price time match, I'm going to teach about the plumb line. That plumb line, where do you draw the vertical line that says there should be a price match from the left side to the right? Another thing that I'm going to teach is get it out of your head about, you know, there are people that have not invested in the stock market for 3 years or more because they've read the newspaper every single day and they've been listening to the politicians and economists. But just like the chart of 1932 to 1937, 38, they went up 500%. If you listen to the news, you would never have invested then. Look at this. The chart tells you natural gas, all that talk about natural gas, look how it's rallied from the low threes all the way to 3.841, where it is. So the technique of coming down and going up in the same price performance, other than crash modes or huge gaps to the upside, most of the time the price goes up very sequentially and comes down very sequentially. Now look at this. It went to that requisite peak D. I call this Chapman wave cup and ladle. I have so many techniques I've developed. This is one of them. The cup and ladle breakout of where the 200-period moving average back at 3.631 of July the 31st. It went to peak D. I spoke about this the other day. I said, in this technique, there's a chance that there could be a pullback from the peak D. If it doesn't come back sharply to retest the 3.631 high of the 31st of July, that's very positive. More importantly, I'm going to squeeze this chart. Chart formations are really important. Look at this huge bowl formation that says natural gas might need just one more little pullback between 3.554, the 200-period moving average, and the daily. This is the December contract, and the most recent high. And if it breaks out, there's a chance that if it can break up into the fours, above 4, in the next 2 to 3 weeks, that'll be a significant break to the upside because it'll create a tremendous base. That is a breakout base in the daily chart. The weekly chart needs a lot more work. It's going to have to break above 4.44, I think it is, 4.35 to break the base. So this is still working on that base. And it's got a left side, right side price time match, which says that the last week of December is where it should be attempting to break into the 4.20, 4.30 area. So I thought I'd go through natural gas and discuss a little bit about my technique. I'd love to take your calls at 877-927-6648. And as we do, we're about to go to a break. I'm going to grab a chart of the ESZ12 in the daily. I showed you the 120-minute chart. Now, this is very interesting. The daily chart is in a beautiful up channel. This is another technique I'm going to teach in my webinar, and I go through it in my seminars. How do you draw the channel lines, and then what's with the reds and the greens? I'll discuss that when we get back. It's called the Inside Track. I'll be back, 877-927-6648. Love to hear from you. Yes, Danny in the Den. I'll look at gold and silver as soon as we get back.
TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. I was asked in the den, what was I looking at? I was looking at can't remember anymore. Time flies when you're having fun. It's the GLD. I was asked in the den if I would look at the gold and silver. There you are. Okay, got the question. Let's see. That was, in fact, I just need to get this right. Danny Atlanta. Can you look at the gold silver? Okay, sure I can. Now let me explain something. There is a technique that I use that says, yes, you can go to a peak. You have overlapping waves. I don't want to talk about that now. It just gets a little complicated. But you go to a D, and then the technicals start to fail, but the price holds. So I've learned over the years to put a down arrow, because it's very important. I've got to be able to distinguish what a sell signal is. But it's not, we are just trying to find the price movement. It's not my fault. I can't take responsibility for the movement of the stock, but I absolutely can take responsibility for my notations. So what I've learned over the years is that if I get a down arrow and it still goes higher, but the technicals remain weak, I put in what I call a caret. It's an inverted V-shaped pattern. And what happened is that the GLD went to a high at peak D in the daily chart of 173.18 on the 21st. It pulls back under the 9-period moving average. That is the maroon color thick line. You can see the MACD, the moving average, convergence, divergence drops. Stochastic looks terrible. On balance, that's the blue line, gives a sell signal. Yet the price ignores it. So the price goes on and it spikes a little bit higher, and it goes to, I should have typed that in, 173.18. So it goes 1, 173.18. And then it goes a tad higher. Now I'm using the white background charts with the notation, mostly because now I'm starting to use what I did before, but in a little different way. The coloration, it doesn't look pink. Yeah, it looks a little bit pink on the chart that I can see on my cell phone. And you can see that there's the gray support line. Well, I'm going to move this over a little bit. And what it says is that the price went to 173.18, pulled back for one bar under the 9 EMA, and then it spiked a tad, 173.62, a tad above. So I've called that leg E, but the very next day it pulls back, so I give it a carrot, a down carrot. I'm going to just move that away. So I give it a down carrot. I wonder if I can pull the chart down a little bit. No, I can't. All right. So at 173.62, then it holds the 9-period moving average. So that could have been A to B, but in fact what it is, it goes to one more spike to 174.07. And then within 2 days, it goes under the 9-period moving average. And that's where it's been all the way through, even to today. And that level is at 170.23-ish on the 200-period move. The MACD is still negative, but the stochastic is just trying to turn. On balance volume is kind of holding okay. Now the question is, so what now? My reading of this says that the technicals are still weak, that there's a really good chance that in the next few days, the GLD, even though the dollar is pulling back sharply, I'm going to have to migrate just a moment to this, the dollar chart is making this arch formation. Let me show you something else that I was asked about in the previous show, my show, and I showed it. This chart here, actually I was asked about the bonds. I don't want to go into that right now. I want to show this chart. This is the Power Shares DB US dollar bull. So basically it's the dollar chart as represented by the trading vehicle, a lousy trading vehicle, but the best we've got, and that's the UUP. It's trading at 21.64, down 12 cents. Now look at this chart here. There was a beautiful 2-year, almost a 3-year up channel that eventually broke in the GLD. And what did it do? It broke. Someone asked me about these lines. These are Fibonacci expansion lines. Sometimes they hit, sometimes they don't. They gave a beautiful signal back on this is the weekly chart, week of 26th of August, because it was only two bars later that it went nominally higher to 185.85, and then it's come down all the way to 148 since then. Now it's bounced back. Now let me expand this chart so that you can see what I'm looking at. You'll see that the dollar has gone below the cup low of 22.14, 22.08, 22.02. It's gone below it by going to 21.57. That says that it failed to use this big bowl formation to break out into the 24s. Instead, it went to 23.14, couldn't even break above 23.62, high of 2010, and now it's making lower lows, starting to make lower lows. Gold is stopped at peak C. I'll talk about that more when we get back, because we're looking at gold and silver, and I'll be right back. Basil Chapman sitting in for Larry.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, we are back. And what I'm looking at here is the UUP, that is the dollar power shares. It's called the dollar bull. I don't know why they call it a bull. That's all bull because it's really a dollar bear. It just keeps going down. Anyway, the dollar, if it takes out in the weekly chart, if it closes under 21.57, the next level will be down at 20.87, 20.84 level for support. Gold, on the other hand, the GLD, I still think it needs at least another week or two of consolidation. That's just my opinion. So as I'm looking at it right now, I believe that the GLD will make leg D, the way it's looking right now, above 174.07. But you can see from the support levels that go back a couple of years, it's right now once again touching the support level after being way below it. So this is now a resistance area. I'm watching it closely, but everything I'm looking at says it's a good chance that gold's going to take a little bit longer as the dollar is about to test. Now, if the dollar successfully tests, doesn't break 21.57, but it says starts moving back up and suddenly goes above 21.96, gold will pull back, the GLD will pull back much more. Now, let's go to here. Let me look at the SLV. The SLV using the black background says it's way weaker than the GLD. It made the pattern that I call the dreaded H in my CD introducing the Chapman Wave methodology. There's a whole section on the dreaded H. What is it? The dreaded H is really, in chapter 17, it's a pattern that looks like a lowercase h. It looks just like this. You come down sharply, you try to rally, you make the H pattern, looks like the lowercase h. If it takes out the left side low bar, it goes even lower. Well, this is very important. Why? Because the silver SLV iShares went above, so it went to 34.05 in the peak E in the Chapman wave, second buy mode, and then pulls back to 32.40 on the 26th of September, makes that arch formation at a peak B minus, it's a peak A minus, right there. And that's usually a big negative, A or B minus, failing underneath the previous high. You've got to be real careful. What does it do? It successfully tests the left side low at 32.49 on the 9th of October, but it tries to bounce, fails at the white line, that's the 9-period moving average, and it pulls back. It touches the 50-period moving average, that's the little pink line there, and now it's very important. And my suspicion is the 32.49 will be resistance. There'll be a bit of a bounce, and then it's going to come back, and the test will be, will it take out 31.52? If it does, my target would be all the way down to 30.36, the 200-period exponential moving average. So my parameters are clear. If the SLV takes out the candle of the 12th and goes above 30, it doesn't even have to close, takes out 31.81, sideways consolidation, more upside coming. If it doesn't, in fact, do that, the weekly chart is saying, very strong weekly chart, just needs a bit of a rest. Chances are that the 31 to 30.50 area will be tested over the next week or two. That's the way I'm looking at it right now. Monthly chart is still quite weak, having made that peak E top at 48.35 after a 472% gain from the low that was made back in November of 2008. So that's what I'm looking at now. Let's just do that same thing with the GLD. Now the GLD is a little bit better. It's been stronger. It held the left side low very nicely, and it's testing, and this is very important. In the Chapman wave, the previous arch high of the dreaded H, that's the lowercase h, at 174, it's imperative to watch that, because if it takes it out, it went to 174.07. If it closes above it, I can't just touch it. If it closes above it in October, there's just no question in my mind that I have to consider that the MACD will improve, stochastic will improve, and that there'll be a retest of the 185.85 all-time high in the GLD. What am I looking for? I'm looking for, look, when the dollar acts so badly, and now I'm going to go question in the den when I look at the EUR for JP. Yes, EUR, USD, and the dollar. Look, we put the relationship together. The EUR, USD, I wonder if this will be better. Yeah, I'll keep it with the black chart. Made a peak, an alternate wave count. Yep, it made a peak D right there at 1.31681. 1.317. And that was on the 17th of September. It pulls back in the cup. How many times are you seeing the cup formation? How many times are you seeing this purple line, the 200-period moving average, being so important that it was resistance and finally it's become support? So that says that the euro, and if you don't mind, just for a moment, I want to show something. Look at the way these chart patterns can repeat over and over. Here's the euro in EUR USD in the 120-minute chart. Look how it broke out. Now there's a left side, right side price time match, which says that the price did not break above the high of the 5th or the 6th of October, right side, but instead it pulled back just a tad, 1.307. That was the high of the week of the 5th of October, 120-minute chart. The week of, that was on the 5th of October, pulls back. There's a left side, right side price time match, which goes to where? Goes to yesterday, the 16th, at 11 o'clock. It should have hit it. It just missed it by, unbelievable, 4.87. So it missed it by 0.002 something. That's amazing. I mean, look at that. Left side, right side, price time match. But the Chapman wave technique says if you smash through the left side high without stopping, and that's exactly what it did today, this morning, last night, this morning at 7 o'clock in the morning. That is very important. That's called, in the Chapman wave, it's called Chapman wave, cup, and ladle formation. that says you should go to a D or even an E, maybe even an F. When it comes back, you're going to see how it tests. Oh, look at that. It went to a peak EF. Oh, so that's recycled. That's either G or a C. So still very positive. That's either G or new wave count C. MACD's good, stochastic's good, but I see a little bit of a turning down in the fast-moving average of the MACD. The stochastic's still at 90%. So there could be a test of 3.1 or 3.05, and then another bounce to the upside. Meantime, this is a very positive move. The big test comes if there's a slide underneath 1.307. That's the high of the 5th of October. If there's a pullback there, it's going to take a little more time, a little more price. So this is a pretty key moment in the euro, just very short term. Why? Because if you look at the daily chart of the EUR-USD currency pair, you'll see that the doji high of the 1st of May at 1.328, there was a perfect left side, right side price tie match, and that says that it's got until the 24th of October to go to 1.328, and it's at 1.31231. So this is very important. This is leg C, cup formation. Doesn't make the pattern that I call the double top dreaded H. Does it pull back and go underneath 1.29, which says, oops, I'm going to go lower, or is it going to spiral higher? You know, when gold is moving up, but it's not doing fantastically. But so far, the left side price time match, which said it should come back to the 16.87 level of the 4th of September, has been very successful. It's held the downtrend line, and I have to admit, it's taking its time. It's looking good. So unless it smashes to the downside, gold smashes, breaks underneath 1729. Let's call it 1727. If it breaks under 1727 in the next, by Friday afternoon, 4 o'clock, it says be careful. It's coming all the way back to the 1705 to the 1698 area. But if it moves higher, it's just a sideways consolidation, very positive. So that's my outlook. It was a little long. Let me make it real short. If the December gold closes above 17.64, it's at 1753. There's just no big deal. It should be no problem just to pop up. That's very positive. It says a sideways consolidation, probably heading towards the 1788, 1790s. If instead it breaks down, closes underneath yesterday's low of 1736, it says be careful, it's going lower. So let me just have a sip of water. Aha, got it. So I hope that answers the question. Now, can you look at gold and silver? Yes, Basil, thanks for the analysis. Great tennis weather in Florida now. Yeah, I'm playing outdoors this afternoon. It's not that hot, but it's beautiful and sunny. We'll see what happens. Of course, I'm not playing anywhere at my full capacity. I am nursing my right shoulder, but I'm doing everything that isn't overhand. So now let's look at something else, and that is the longer-term formation in the weekly chart of the gold contract. You see that rectangle? Rectangles can last a lot longer than your patience. And that says that the doji candle with a high of 1798.10, there's a good chance, here again, that you're just in this trading range. It's going to last a little while longer. And very often, these patterns say, be careful, because as you think it's breaking out to the upside, it's just about to go back down. So I would say it decisively has to, and the weekly chart has to get to like the 1823 area, and then I have to say, no, 1823, yeah, 1823, and then I can say, excellent action. Right now, it is great action just as a sideways move, but I don't see it as being all that strong. Now let's talk about the dollar. I spoke about the UUP. The dollar index, this is very interesting. Made a peak day, a beautiful left side. Folks, if you want to learn about these patterns that repeat over and over, look at this chart. I'm going to be teaching this course. I'm going to be going into great detail on how you can use these particular methods to help you. I use it all the time for my subscribers. I just do my absolute best in trying to get these things. We have 3 longs Now I can say that all three longs are positive. This morning one was just a tad under, but now all three are positive, and all three shorts are negative. That's good. I mean, you want your shorts to be negative. So these are techniques that I teach, how we use them. But look at the dollar weekly. It went to, I'm going to squeeze this so that you can really see how fascinating this is. It went from a low of 74.17 in November of 2009 all the way to a peak E. Remember I spoke about each pattern should go to a D or an E. How, just today alone in these 2 hours, I haven't yet made 2 hours, I couldn't even tell you how many times it's done that. Trough G goes to a peak E at 88.71. That was the week of 11th of June 2010. Plummets down to 72.70. Then I identified a midpoint that I call a plumb line. It isn't always the low, and it isn't always the little W in the middle of a U-shaped pattern. There are certain candles that I use. There are certain moments that are very important. But then you also want to put it together with a technique that I use that's called the Chapman wave inside wedge. That inside wedge said, that's this dashed line right here. Let me just change the color. I think you can see it. Let me just double check. That line says that there's a price movement that should take you towards the 83s, and that was the high of 83.56, 83.45, the high of July of 2010 in the weekly chart. And there was a cup formation. It turned out to be a bowl formation because it's kind of broad. And it broke out, and it went all the way back from the 72.70 level in a very steady stair-step move in two buy modes to peak E, pull back, then a D, and D went exactly to that level. It went to 83.63, 83.64, 84.10, and then it pulled back at peak D. And what has it done? It's got under the 200-period exponential moving average. I don't know if that's the color I want to use. I'm going to find the color that really suits my eye. I have to have a color that suits my eye. No, I know what to do. I'm going to make it bigger. So this is the style. There you go. That's the one. So that one right there with the little dots on it, that's the level. And it says we are now under it. The 200-period moving average is resistance. There's a pattern that I call the dreaded H. Remember the drop back at the double top? Well, this is the double bottom. So how it handles 78.60 is going to be really important. And look at the stochastic making a little arch formation that says I might be making a W, but until I do that, look at the MACD. It's very negative. That's how I use these particular indicators. So I hope that helps. And I'm going to do a couple of things. Let's see. I think that we've got... No, we haven't got a break. Oh, John in Philly. Hi, John. How are you? John in Philly on the line. John, you there? XHB is in fact... that's the home builders. Yeah, sure. John, if you are there, just give me a yell. Maybe I just didn't see you and you got tired of waiting. I'm sorry if that was the case. We're looking at the XHB, and that is the home builders. So while John is getting ready to talk to me, John, talk to me, please. I'm going to be doing this. I'm looking at, there's the break. All right, we'll figure out what's going on. We've got John on the line who wants to look at the home builder, SPY, S&P home builders in the leg F in the daily. That's different to what we're looking at in the HGX index. I'll be back. Basil Chapman, sitting here for Larry Pesavento. Dow is down 9, S&P's up 6.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman. This is Larry's show, Trade What You See, and I'm sitting in for him. My usual show is Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon. Now, I don't know if John is still there. John, just give a yell if you're there. In the meantime, you want to look at the XHP. That's the SPY S&P Home Builders. What's really important about this chart, two things are happening. It's so funny. I was just talking about this very thing, about those carrots and how you can use them, how you can use the double top formation, how if you break to a new high, you've got to study it and see what's happening in the chart formation. Let's do the monthly chart. Monthly chart, I'm calling right now leg F, but it could very well be a new buy mode with a restart. So this could be either F or C, but there is nothing negative about it. I don't even have to make a decision. The MACD is good, the stochastic's good, everything's positive. It looks like it wants to, it's at 26.07, up 68 cents. It wants to try for the 27s, where the 27.53 200 period exponential moving average is, where it hasn't been since May of 2007. Okay? So it's very positive. The weekly chart had an alternate count because it had that pattern I was just talking about, the Chapman wave, cup and ladle breakout, and it spirals to the upside. The upside says, great, now it's in leg D, holding the 9-period moving average. MACD is very strong, stochastics at 86%, nothing negative there yet. So we look at the daily chart. And the daily chart says, now this is a technique I must write down in my notebook because it's fabulous. If you can identify it, the high that was made on the 27th of August at 23.59, and the holding of the 9-period moving average in 2 bars. And only on the 4th bar does it break above, because it only goes to 23.57 on the 29th. That's a technique that I teach. If you can identify that, that's as powerful as the instant restart. What does it do? Takes you to another buy mode peak D, spikes a little bit higher to the doji high of 26.16 on the 21st of September, pulls back, and it makes the patterns we've been looking at all day, the double cup formation. I actually give it a nickname in the Master Trader series, but we won't do that now. And that double cup formation says that I can have a parallel wave count. It's either peak F, which would be very negative, or peak C, which is very positive. I don't have to do anything yet because it's holding above the 9 EMA at 25.31. It's right now at 26.07. If the MACD, the moving average, crosses and holds positive for more than 3 sessions, that is going to take it to the 26.50 or maybe even the 27 area. The stochastic's only at 45%, so there's a lot of work that has to be done because the price is leading the technicals. Always a little bit dangerous, but not a big negative as long as the price, which is the arbiter of direction, is moving well. So this is very important. A close between 25.31 says, move's finished for now. Rectangle formation, probably going to test the 24.30s. A breakout into the 26.50s, very positive. Hey folks, thanks for being here. I'll be back tomorrow at 11 o'clock for my usual show. Please check out front page of TFNN, my webinars and seminars coming up, plus my opening call.